Hello everyone, welcome to today's session. So today we will be continuing the chapter of audit evidence, and we will deep dive into the topic, and we will understand further the requirements of standards, and we'll do the practical scenario on the same line. Okay, then. So quickly to proceed further. So in last lecture, or last session, we did a lot of practical questions. Like throughout the session, we did a lot of practical questions. Now, before I proceed further, even in the last session, I reiterated that if you guys have any doubt at any point in time, please write it down, or please let me know, so that I can take up the doubts, I can solve your doubts, and on the basis of this, I can enhance the clarity of the topic for you guys. Okay. So if you have any doubt at any point in time, do let me know. That will be, really helpful for me also. And it will, clear out your doubts, your understanding about the topic. Okay. So till now we have discussed a lot on SA 500 series with respect to audit evidence point of view. So today I want to start with first SA 530, which is basic one, which is sampling. I'll not invest much time on the say 530s, the part of theory part. Reason because it's pretty simple, and you guys have already seen in the enter SA 530. Okay. So just to summarize SA 530, and then we can go to the practical questions of SA 530, because we want to understand how to apply practically that particular essay. Okay. So who can tell me what is SA 530 about? Good morning, Shruti. Good morning, Salesh. So who can tell me what is SA 530 about? Anyone would like to try? What SA 530 is about? Very good, Salesh. Very good, Rajneesh. Very good, Tanisha. Yes, it's about audit sampling. Okay. Now, audit sampling, why we need a standard on audit sampling, that is very important for us to understand. Now, if I talk about the objective, overall objective of the auditor with respect to an audit, it is to gather sufficient and appropriate audit evidence. Okay. The auditor has a responsibility to design and perform the audit procedures to obtain sufficient and appropriate audit evidence, to be able to draw conclusions on, which to base the audit opinion. So first, he need to design and perform the audit procedures. Second, he need to obtain sufficient and appropriate audit evidence to draw the conclusions on the basis of which the audit opinion will depend upon. Okay. Now, when I talk about, design and performing audit procedures plus obtaining sufficient and appropriate audit evidence, means I have to design audit procedures to gather sufficient and appropriate audit procedures. But at times it becomes difficult to, verify everything, to check everything. In that case, the designing and performing audit procedures includes sampling methodology, okay, to gather audit evidence. Now, if I want to gather sufficient and appropriate audit evidence, I have to make sure that, my procedures which I am designing are appropriate, okay, are relevant, okay, and sufficient, so that it can give me appropriate and sufficient audit evidence. I'll tell you with an example. Okay. Let's say, let's take one example. Okay. Let's say, for example, there is a fixed assets. Okay. Of rupees 2.5 CR in books of XYZ Limited. On the similar lines, there are intangibles of rupees 10.25 CR in books of the same company. Now, let's say Mr. X or Mr. A is the auditor, okay, of XYZ Limited. Now, if Mr. A is the auditor of XYZ Limited, he needs to design and perform the audit procedure in order to get the sufficient and appropriate audit evidence regarding fixed asset and intangibles. Okay. So let's say, for example, if I give you some summary about the fixed assets and intangibles. So let's say particulars, number of items, okay, amount. So we know amount of the fixed asset was rupees 2.5 CR, but the number of items or number of asset, the total of which is making this 2 CR is, let's say, 200. And when I talk about intangibles, so we know the amount is 10.2 CR, but the total of item is only five different intangibles. Now testing that is required to be done. Now let's say I want to test a kind of existence, okay, of fixed assets and intangibles, and I want to test the existence assertion over here. So if I want to test the existence assertion, what you would suggest me to do? What you guys would suggest me to do here? Let's say I want to test, whether physical fixed assets are existing and they exist, So what should I do for that? Come on, guys. So suggest me some things that I should do to test the to take the comfort on the existence assertion of the fixed asset. Come on. I asked you, okay, there is a fixed asset, 2.5 CR, 200 items. Now there is a risk with respect to the existence of the fixed asset. I want you to design the audit procedure for this particular area. So what you will design so that it can cater, the existence assertion of the fixed asset. Okay, Viraj, good. Kind of, on the similar lines. I would say something on the similar lines. Very good, Tanisha. Come on, guys. Good, Sandhya. So you guys are saying, like, I know most of you have that I should perform physical verification. I'm happy that, yeah, I will perform the physical verification. Okay, I'm fine with the physical verification. Now the question comes is that if I need to perform physical verification, then how many samples, or whether should I perform the physical verification of the 100% or how many sample? If I want to do physical verification, then how many samples I should pick? Or should I do 100% physical verification? Come on, guys. So again, the question is that, how many samples would you suggest for the physical verification? Okay, Viraj, very good. Geeta, that is the thing. How to fix that? Okay, Kriti. Okay, Sailesh. Okay, so very good questions. Depends upon the materiality. Let's say materiality, which is overall materiality, is coming to let's say rupees 75 lakhs, and your performance materiality comes to 25% of this. Let's say 25 into, let's keep it 20 lakhs. Okay, this is the materiality. Now, how will you say how many samples I need to select? How will you define how many samples I need to select? Should I go for 100% or should I go for, only partial samples? See, that's the main problem that we are discussing over here. Okay, so correct, Vijay. Your answers are correct, guys. Good, Tanisha. Very good. Good, Rajneesh. Okay. Good, Shruti. Very good. Good, Geeta. So, your answers are correct, but the question again states, comes on the same point that how should I decide what is the appropriate size of sampling? I know it should be based on risk assessment, based on materiality, but how should I decide that? What should I do with respect to that? Like, there should be something. Let's say, for example, later on, I have everything. I have every information with me. Then what should I do? How should I calculate that? Are you getting my point? So till the time you do not know that how to calculate samples, that will be a problem. Okay. That's the problem actually, because we do not have the, details with respect to, okay, what should be a sample size. In that case, the standards help us out, to decide on what basis we need to select the samples. So, Geeta, let's say, for example, you gave one limit. Now, how, whether, okay, today you gave a limit of 20 lakhs. So you are saying that 20 lakhs or above, we have to take the samples. I say, no, let's take 30 or go for with 15 or go with 19. Why only 20? Because so there should be some logic. If I'm giving a number, there should be based on some calculations, some, now here the point is that if I select a sample, that sample should be that much sufficient that it can provide me, okay, it can provide me the image of the entire population. So for example, if I select very few samples, I am, there is a risk that those few samples will not depict the image of entire population, the how entire population is. Why I do sampling is I do sampling in order to identify that whatever samples I'm selecting, if they are depicting the image of the entire population, then by testing the samples, I can get understanding of the entire population. Correct? In the same way, if samples are not depicting the image of the population, then it's a problem for me, because if they are not depicting the image, in that case what will happen is I have to means whatever I will test or whatever conclusions I will draw, I cannot relate those conclusions back to the entire population. Okay, so that's the main concern for me now. So I need to first of all understand whether the population that I have with sample size is representing the entire population or not. Clear? Any doubts? Any doubt, guys? Okay. Now, let's say in this example itself, okay, based on these given details, I cannot say what sample I need to select. I cannot, because I need some more detail here. Okay. Some more detail means if I want to select a sample, okay, I need to have two more things. Like in case of substantive procedure, I need to have one thing called as a tolerable misstatement. Okay. Now, what is a tolerable misstatement? Tolerable misstatement kind of an amount set by the auditor. Okay. In respect of which auditor wants to obtain a reasonable level of assurance that the monetary amount that I have set, okay, the level of tolerable misstatement I have set is not being exceeded. Means that is, let's say for example, the maximum permissible misstatement I can, accept or I can tolerate from this particular problem or from this particular testing. So let's say for example, if I set 200 rupees, so that is the maximum limit of misstatement I can tolerate. Otherwise, if the misstatement increases more than the 200, okay, then in that case, what I need to do is I need to revise my audit procedures and I might need to, gather more audit evidence. Okay. It's a kind of application of performance materiality, okay, but at a smaller level. So the way you have a performance materiality for a particular line item, you have a tolerable misstatement level for a particular testing or for a particular sampling procedure. So overall materiality, impacting the overall financial statement, performance materiality impacting a particular class of transaction or balances, but tolerable misstatement impacting a particular test or audit procedure. Okay. Now, tolerable misstatement can be same or lower than your performance materiality. Generally, let's say if I have a performance materiality of 20 lakhs, Okay. I may call tolerable misstatement, something near to 5% or 2% of that. Because, see, if it is at the procedure level or the audits, you know, testing level, then I have to make sure that even, together, all the misstatements that are identified should not be more than in total than the performance materiality. Okay. So the tolerable misstatement is kind of, I will take up some portion of the performance materiality and will allocate to a particular testing. So let's say in this case, I have allocated only 5 lakh of rupees. Okay. Tolerable misstatement, I have allocated only 5 lakh of rupees. Now, based on this tolerable misstatement, materiality, okay, my total population, number of items, I can now derive sample size that is required here for the testing purpose based on a mathematical formula. Okay, based on a mathematical formula, now I can derive a sample size and accordingly, I can select the samples. So tolerable misstatement again is a professional judgment. It's not something that depends upon any there is any specific guidance, but it's generally uh, professional judgment, I would say, and it's generally we take as a 5% max to max 5% somewhere of performance materiality, not more than that. Okay, but if you take lower tolerable misstatements, you need to test higher samples. If you take higher tolerable misstatement, you might need to take lower samples. You might come up with a lower samples. Okay. Any doubt till now? Any doubt? Any doubt, guys? And it is not related to something I would say audit related. It's a pure mathematics that we are talking about. Okay. So necessary sample size is just a pure mathematics if you see with respect to this. But it is our mathematics being applied over what you say to audit. That's it. Okay. So once you have all these things, now you can calculate a sample which is a mathematically derived one, based on which you can now say that these samples represent the phase of entire population. They represent the entire population. Now there are various ways to do sampling. This is the one of the way which is known as a kind of random selection of sample, because whatever number I will be getting, I will be randomly picking up from the sample. Okay, so this is kind of a random selection, okay, of sampling, random sampling. There are many other ways of sampling, many other ways, which include my systematic selection. Okay, if I talk about systematic selection, it is kind of selection in which I select or I divide the population based on a sample interval. For example, let's say if I have a population of 200, okay, I will divide the population in the bunch of, let's say, 40s or 20s, and out of each bunch, I will pick up first two and last two. Systematic selection. Okay, so I have a systematic pattern for which based on which I am selecting the sample. It's not random, it's systematic. Okay, now then the next way of selecting is weighted average value method. So in this, what I do is I take up the monetary amount of the sample, okay, and I assign a weight, and on the basis of weight, to that particular sample, I select the sample. Then I have, again, various type of random samplings. When I talk about random, it is again, simple random, stratified random sampling. Then you have, risk, other than risk is, then there is a risk-based sample selection. Again, you select the sample based on some criteria and risk. Okay, if it is fulfilling these criteria, the sample is selected. If it is fulfilling these criteria, the sample is selected. Okay, so risk based selection is also there. So there are various type of sample selection. And then formula one, which I was talking about, is a random selection, which gives you, or it's a kind of a, which is applicable more to the random side, random sample. Because in the risk based, or in the what do you say, in other methods, you pick up the sample which are required to be picked up, or which fills all the criteria of your checkbox. Okay, so this is how you generally calculate the sample for a particular testing, which gives you the comfort, okay, on the side that, okay, this is something that you need to test. Now, once I derive the sample, okay, once I derive the sample, what I need to do then? That's the main important part. If I derive the sample, I need to test the sample. And after testing the sample, I need to understand the deviation projection or misstatement projection, okay, in that particular sample. Okay, let's say, for example, here, I'll continue this example. I'll come to the fixed assets. Uh, let's say number of items. Okay, total amount. Now, this is for your population. Now, here I will talk about sample. Number of items, total amount, population, sample, and I have a misstatement. After testing, let's say I'll go for the fixed assets. Okay, so the number of items were 200 that we saw, and the amount was 2.5 CR. Now, the sample that I selected, let's say I selected 50 samples to test out of 200, or let's say I selected only 30 samples to test. So I pick up 30 samples to test out of 200, and I selected random sampling. I did random sampling. Now, random sampling will have a chance of whatever sample can be selected, like of whatever amount. So let's say, for example, the amount that I covered in the testing out of 2.5 CR was only 35 lakhs, or let's say 25 lakhs. So I tested 30 samples of 25 lakhs, and I have identified a deviation of 1 lakh. Now the question comes here is, how should I interpret this 1 lakh? What should I do with this 1 lakh? Okay, I have identified, some deviation of 1 lakh in my testing. What should I do now? How should I interpret this 1 lakh? Anyone of you? How should I interpret this 1 lakh rupees? So if I want to interpret this 1 lakh rupees, how should I do that? What should I do? What should I conclude about this 1 lakh rupees? You tell me. If you are on my place, let's say I have told you that, okay, this is the 1 lakh rupees, misstatement I have identified. Now, whether it is fine, whether I need to qualify, whether I need to do something more, what you will do with this 1 lakh rupees? What you will do with it, this 1 lakh rupees? Anyone? Anyone? So, okay, good, Tanisha, very good. Okay, Sandhya, on the basis of which, like, how do you are saying that, this is required to be done, Sandhya? Like, some basis or some reason behind that? Come on, guys. What should I do of this 1 lakh rupees? That tolerable that misstatement I have received. What should I do of this 1 lakh rupees? Simple. Anyone? Good. Viraj? Okay. Good, Vijay. Very good. Anyone else? Anyone would like to answer this? Anyone would like to answer this? Okay, I'll tell you. Now, most of you have answered that, in this scenario, nothing is required to be done. Okay, because it's below 5 lakh rupees of tolerable misstatement. Fine, tolerable misstatement is 5 lakh rupees. I have received the misstatement of 1 lakh rupees. That is fine. But do not forget that the misstatement that I am looking over here is 25 lakh, is 1 lakh rupees in 25 lakh. It's not, 1 lakh in 2.5 CR. So whenever there's a random sampling, I need to project the misstatement first of all. So I need to calculate first the projected misstatement. It's pretty much simple, projected misstatement. So in 25 lakhs, I have 1 lakh of misstatement. So how much I will get in, 2.5 CM? Simple. That's a cross multiplication that I'm doing, to calculate the misstatement. So it's simple. I will get 10 lakh rupees. This is a projected misstatement for me. Okay. For me. Now, as I told you, tolerable misstatement is something is for the particular procedure. Performance materiality is something, for my uh, a particular balance. So I could say today in fixed assets, the total misstatement I'm expecting is rupees 10 lakh in fixed asset. Now, this is below my still performance materiality, but when I'm evaluating the misstatement, I need to evaluate the misstatement in that particular line item which I have, identified from all the tests. Let's say, for example, in physical existence, in existence case, I identified a misstatement of 10 lakhs. But let's say when I perform the valuation, at that time also my misstatement in fixed asset, okay, at the time of valuation was rupees 12 lakhs. So in total, I could see there is 10 plus 12, 22 lakhs of misstatement, which is beyond my performance materiality. So whenever I am evaluating the misstatement, projecting the misstatement, I need to first of all see whether, it is required to be projected on the whole of the population or not. Okay. So I need to check whether I can, whether I need to project the misstatement to the whole of the population or not. If yes, then I need to consider the projected misstatement and then I need to, come to a conclusion. It may happen that, with the other misstatements that you have identified from the other processes, it may cross your performance materiality limit. At that particular point in time, you need to see what is the aggregated misstatement from this particular, what do you say, procedure plus from any other procedure that is there. I hope you understood the point over here. Any doubt with respect to this? Any doubt, guys? No? No doubt? Any doubt? So here, Tanisha, we need to project the misstatement, not to bring down the, my performance materiality or, total materiality to that level. Okay. So once you have projected the misstatement, now you can take a conclusion or, you can evaluate whether you need to perform additional audit procedures or whether you need to qualify or, modify your opinion. Okay. Now, going forward, let's say, we decided to test 30 samples. Okay. Number of items out of 200. Okay. So what was the scenario is I was required to test 30 samples with respect to the existence. That is what I'm doing here is physical verification of fixed assets. Okay. Now, sometimes this may happen. I'll tell you with an example what I'm talking about. Let's say you are doing physical verification. Okay. So you have list of 30 assets. that you need to verify physically and you have selected randomly. So it may be, asset number 1, 3, 5, or 9, 18, something like that. It goes on, 22, random. I'm picking up the random. It may go on, till the 30 assets that you have selected for the testing. Okay. Let's say you have selected list of 30 assets that you need to verify. Okay, you have a asset number, asset description, and everything is there. Okay, amount is there, book value. So everything is there. I'm not going in that particular detail. Now you are doing physical verification. Okay, you're going and checking whether the asset is physically present or not. Now, let's say, for example, there is one asset. Okay, asset number 9. This particular one, number 9. Now, this asset is actually not present on the particular site because it's either lying with the customer for some work or it is with the third party. So let's say this asset is lying with customer for performance of contract. Now the question comes is you are not able to perform this procedure on this. You are not able to perform the procedures that you decided that I want to go and physically verify this particular asset. You are not able to do that. Then what you will do? I'm not able to verify this asset. Like I thought it is lying with me, but it is not lying with me. Then what should I do now? What should be done in this scenario? What you would have done, let's say, for example, the asset number 9, okay, the fourth asset, asset number 9, XYZ description, the XYZ amount, this asset is lying with the customer. You cannot verify the physical existence of this particular asset. What you will do? Anyone? What you will do in this scenario? Come on, guys. What you will do in this scenario? We need to understand that, like say, for example, if you are not able to apply a procedure to a particular fixed asset, okay, for which you are going to test, if you are going to perform the testing, what you will do? Come on, guys, quickly. Okay. So someone has said replace the sample. Someone said confirm with from third party. Anything else other than these? Like replace the sample or confirm from the third party? Any other way? Any other way out? Any other way? Third party physical verification. Yep. Good Vijay. Good Charu. Good Tanisha. Yep. So, yes, you guys are correct with respect to this. Okay. So, where I'm not able to perform, the designed audit procedures, what I can do? Simple. I can go and I can perform alternate audit procedures. Okay. Like you said, physical verification at the third party side, or, I may ask to send a confirmation. But the question comes is, what if you are also not able to perform alternative audit procedures? So you cannot send the third party confirmation. You are not able to do, physical verification at the customer location, or you are not able to perform any other alternative audit procedure. What you will do in that case? So, okay, you said if I'm not able to perform the normal procedure, do alternate procedures, confirmation, confirm with the customer, physical verification at the customer place, all such parts are there. But what if I'm not able to do that also? What will I do? What if I'm not able to do that also? Because of some XYZ reason, okay, I'm not able to perform that. Either, the customer is either, there could be some multiple reasons for which I cannot perform. What will I do in that case? Okay, Mohammed, good. Very good, Shruti. What will I do if I'm not able to, even perform the alternate audit procedures? Very good, Tanisha. Okay, good, Vijay. Good, Kriti. Come on, guys. Okay, so very good, Shruti. Very good. So first of all, in that scenario, I will count this particular sample as a misstatement for me. This is a misstatement for me. This sample will be called as a misstatement for me. If I'm not able to apply the procedure, this is the misstatement. Number one. Number two, after calling that as a misstatement, I may need to revise my risk of material misstatement and my audit procedures. I may need to discuss with those charged with governance plus management. I need to reconsider fraud risk. Then the last one will be I need to reevaluate. I need to evaluate the impact on my audit opinion. Okay, based on the materiality levels. But before that, it will be a misstatement for me. It will be counted as a misstatement for me because that sample, I was supposed to apply procedures on this sample, but I'm not able to apply. That's why it's a misstatement for me. Clear? Any doubt till now? Okay, let's say there is another sample on the similar line. Let's say sample number 22, asset number 22. On this particular asset, asset number 22, what is the scenario is this one. What is the scenario over here is that I was supposed to do physical verification of the assets, fixed assets, but this particular fixed asset is, uh, no longer physically present. Reason because it's either, embedded in some other fixed asset. Okay, this particular fixed asset is either, part of some bigger fixed asset where it is not, separately available, or it's kind of, available, but it is consumed. Let's say, for example, I'll give you an example. Uh, some liquid chemical or oil. Okay, or some kind of thing that I have obtained, which has a good useful life of 2 to 3 years, some part or machinery, something which is now part of a bigger machine. I physically cannot verify because it is mixed and it is no longer, I have a distinct, uh, you know, identification of that particular material with me, something like that. Or you can say, another is, let's say this was a fixed asset, okay, but that is not physically available. This is virtually available. For example, I have taken, processing capacity or a computer or a server, but that server is on cloud. Okay, so let's say, for example, this is server on cloud. That will be more good example. This is server on cloud, asset number 22. Okay, because I have taken it for 5 years, so server on cloud, which is not present on my physical desk or something. But there are server equipments on the cloud. Now, how do I perform physical verification for this? How do I perform physical verification for this? How do I perform physical verification for this particular item? Very good, Tanisha. Good, Geeta. Anyone? How do I perform physical verification of this now? I received two answers. One from Tanisha, one from Geeta. Very good. What else? What else, guys? Okay, Kriti, very good. Good, Vijay. Anyone? Okay, good Shruti, very good. Good Tanisha. Good Mohammed, very good. Okay, I'll tell you few things over here. Number one, this I would call as an intangible, not a fixed asset. This is a wrongly classified asset. Okay. Number two, if that is available on the cloud, but I'm not able to verify because this is server on cloud, you even cannot go and physically verify over on the cloud. So even if you go on the place where this cloud is situated, you won't be able to verify over there also because you cannot identify which is the server capacity that has been allocated to me. So what I would call this sample as is that this sample, the desired audit procedure, if I want to verify existence, I cannot. This procedure does not apply because there is no risk with respect to the existence on this particular sample. So the audit procedures does not apply to this sample. Okay. The audit procedures does not apply to this sample compared to I am not able to apply. See, there were two things. One, I am not able to apply audit procedures because the physically asset is not present. It is present with someone else. But the audit procedure itself is not applicable because asset never existed physically at the first place. There is difference between I am not able to apply and it is not applicable. If I say I am not able to apply, it may result into a misstatement. But if I say I am not, it's not applicable at all. Okay, then for this particular item, I need to seek a replacement sample. Are you getting my point? So if I say procedure not applicable, I need a replacement. If I say not able to apply, misstatement. So you need to understand the difference between whether I'm not able to apply, decide where it's a misstatement, or it's not applicable to it. Procedure is not applicable at all. Are you getting my point? On the basis of that, you will either replace the sample or will call it a misstatement. So after doing this everything, you will decide whatever is your conclusion based on the sampling. Clear? Any doubt? Any doubt? Any doubt, guys? No? Are you clear on this? Great. Okay. Good, Vijay. Okay. Now, so this is everything about SA 530 sampling. So I'll summarize what we have discussed till now. Okay. So to understand what we have discussed is we first discuss the objective of auditor when using sampling is to provide okay, is to provide a reasonable basis for the auditor to draw the conclusion about the population. From the sample which is selected, okay, from which the sample which is selected, or from the sample from which the sample is selected, okay. So I need to draw conclusion from the samples which are selected, and for that I need to test the samples, and then I need to come to a conclusion of that, okay. What I need to do is, when I'm selecting the sample, okay, selection of the sample, there are few things I need to take care about these this selected samples, okay. That number of samples, that I need to determine, okay, number of samples that I need to determine shall be based on some formula, some mathematical approach, or some way, okay, that should be adequate, okay, for me, that should be adequate for me to provide that particular or to help me to provide that conclusion about the population. So number of samples to be determined, should sufficient enough, or that should be appropriate enough, that it should reflect the characteristics of population. That the sample that the sample should uh, reflect basically the characteristics of a population. Okay, then uh, it should be, okay, that sample that I'm selecting, it should be sufficient enough to provide me a conclusion also, and that is required to be based on the materiality and whatever we have discussed. Plus, I need to make sure that each item in population should have a chance of selection. That means that in when I'm selecting, I should not exclude something. I should give at least a chance of selection to each of the item. Now, if I'm applying random sampling, then I should take the full population. I should not exclude any item. If I'm doing risk-based selection, then again, I need to consider the whole population. Then I need to apply whatever, the thresholds and everything I need to apply. So I need to give population, each item in the population, a chance of selection. I'm not talking about equal chance of selection. I'm just talking about chance of selection. Okay. So that chance of selection should be given to that particular population. Then I need to perform the audit procedures, and then I need to check whether the audit procedures are like replacement sample or a misstatement sample. So on this selected one, audit procedures are required to be applied. Now, there could be two scenarios that we will be discussing here, and we have already discussed with example that if the audit procedure is not applicable, then the auditor shall perform similar procedures or the procedures on a replacement item. Okay. If the auditor is unable to apply the audit procedure, the design audit procedure, okay, or certain or alternative audit procedures, okay, in that case, the selected item shall be treated as a deviation or misstatement. Okay. So that should be treated as a misstatement. Now, for each and every misstatement, I need to, investigate the nature and cause of the misstatement, identify their possible effects, and everything is there. And I need to also, project the misstatement. So once the testing is done, if I have identified misstatements, so for misstatement other than anomalies, other than anomalies, other than anomaly are required to be projected are required to be projected on the population. Now, second way, when there is an anomaly. And now, in case of anomaly, what we are required to do is, we will have to make sure that, we need to have a higher degree of certainty. High degree of certainty that such misstatement or deviation is not representative of entire population. Okay. So first we need to make sure that we should have a higher degree of certainty that the misstatement or the deviation is not representing the entire population. Okay. Because that's an anomaly. Okay. Now, if I identify an anomaly, in that case, either I perform alternate audit procedures, okay, or whatever misstatement is coming, anomalies are not required to be projected. Anomalies are not required to be projected because I will say this is not representing the entire population. Clear? So if it is anomaly, then I need not to, consider that particular one as a misstatement or deviation for my population. But for other misstatements, other than anomaly, are required to be projected on the population. Clear? Any doubt till now? And this is only applicable for substantive testing. That is not for test of controls. So in test of controls, we do not project misstatement. Remember that. Again, I'll write it down. In TOC, no projection of misstatement is done. Make sure, very important. In TOC, no projection is done. So whatever misstatement we have identified, it will not be projected on the population. Okay. So the number of samples to be determined should be based on the sample should reflect the characteristics of population. So my total number of samples, whatever I'm selecting, should reflect the characteristics of population. If the replacement is also like previous one where you cannot apply the population, or the audit procedures are not applicable. So let's say for example you replace the sample, but again the audit procedures are not applicable on that particular one. If audit procedures are again not applicable, then you can replace the sample. Clear? Any doubt? Any doubt? For example, there was a particular sample. Now you replace the sample because the procedures were not applicable. You selected a sample. Now again on the a sample, the procedures are not applicable. You will select B. If the same scenario is coming with the B, then you will select C. And let's say, for example, if 10 or 12 items are appearing, like, where the population, procedures are not applicable, then in that case, you need to look upon that your population consists some bigger items on which this particular procedure is not applicable, means your procedure is not defined appropriately. Because your procedure should be applicable to the majority of the population. And if I identify a lot of samples where the procedures are not applicable, then either your procedures are not defined appropriately, or you need to stratify, means you need to segregate the population, like population of this kind and population where procedures are not applicable, I will apply another type of procedures. So in that case, segregation is required. Clear? Any doubt? Sure, Shruti. Okay. If no doubts, then let's take a quick 10-minute break. And after the break, we'll gather back and continue the session. Okay. Let's take a quick 10-minute break. Hello everyone, welcome back. Okay, let's continue the topic. I hope everyone is recharged back and we can now, proceed to the next standard. Okay, that we need to cover, that is SA 550. Who can tell me what is the name of SA 550 or what SA 550 deals into? Come on guys, who can tell me about SA 550? What is the, name of the standard and in which area it deals with? Come on guys, what is the name of SA 550? What is the name of SA 550 guys? Very good, Geeta, Tanisha, Kriti. So SA 550 is related parties. Okay. SA 550 talks about related parties. That is pretty much simple. Okay. Now the question comes is when I talk about SA 550, okay, or when you even like look into the related parties or you want to audit the related parties, it's very important to understand what is our objective first of all. Okay, based on that only we can decide what we need to do, and I'll explain what I'm saying in detail, don't worry on that part. Okay, now when I talk about related parties, there are various reporting requirements. There are various requirements of applicable accounting framework. Let's say for example company set, let's say AS, ind AS, over and above the SABI listing requirements. Okay, a lot many things are there, lot many things with respect to the related parties. Now the question comes is, if there are a lot many requirements, then we need to also understand the requirements of those particular particular applicable accounting applicable financial reporting framework in order to provide that okay they are being complied on. Are you getting my point? So when I talk about related parties, okay, I actually need to just make sure that we are complying with the provisions, we are complying, we are also complying with the requirements of each and every financial reporting framework. Okay. Now again, this is basically, again I'll not go on the theoretical side because you already covered in your enter this particular chapter. I have but let's see more from the practical side, this particular chapter, from a practical angle. Okay, so now when I talk about related parties, let's say what is the objective of the auditor over here. When they are auditing the related parties, what is the objective over here? Okay, now related parties, now as a financial statement as a whole, okay, is required to be free from material misstatement, and on the similar lines it will be the responsibility of the auditor, okay, to make sure that the financial statement are free from the related party transactions. So because related parties are not independent of each other, okay, and due to many reporting requirements, Okay, many reporting requirements. Okay, the auditor, the auditor has a responsibility, ability, okay, to perform audit procedures, to perform procedures to identify, assess, and respond to the risk of material misstatement arising from related party transaction, okay, and to ensure that financial statement as an whole are free from related party transaction. Okay, clear? So this is the objective of auditor. Any doubt with this? Objective of the auditor? That the financial statement, so the auditor's responsibility to perform the procedure and identify, assess, the respond to the risk of material misstatement arising from related party transaction, and to ensure that the financial statement are free from related party transaction as a whole. Clear? Any doubt? So clear with the objective of the auditor? Yes, no, no doubts. Okay, good, Vijay. So everyone is clear. Okay, good, Tanisha. Very good. If everyone is clear, then this is wrong. If everyone is clear, then this is wrong. Again, understand what I'm saying here, what I have written. I'm saying that auditor has a responsibility to perform. Auditor has a responsibility to perform procedure to identify, assess, and respond to the risk of material misstatement arising from related party transaction, and ensure that the financial statement as a whole are free from related party transaction. Can you make it that that the financial statement should be free from related party transactions? Is that the responsibility of auditor? That the financial statement are free from related party transactions? I have written something and you guys are just saying yes to that. So that's why I'm asking. Is this the responsibility of auditor to make sure that the financial statement are free from related party transaction? Very good, Geeta. Good, Tarisha. Yes, absolutely. So, correct, Charu, correct, Kriti. So, auditor's responsibility is not to ensure that the financial statement as a whole are free from related party transaction, but it is to ensure, okay, to ensure that the risk arising from related party transaction and risk arising from, okay, risk arising from related party transaction and from the entities failure to appropriately account or disclose related party transactions, balances, relationships, okay, in accordance with financial reporting framework. Applicable financial reporting framework means it is the responsibility if there can be two types of risk. One, risk arising from fraud, risk arising from the related party transaction. Number two, entities failure to appropriately account and disclose related party transaction balance relationships in accordance with the financial reporting framework. Okay. So because of such nature, the objective of auditor to ensure that these risks are addressed. Okay. Now, even if the financial reporting framework establish, minimum or no requirement at times, auditor is still required to, test the related party transactions or, need to perform procedures to validate these risks. Okay. Reason because I'll tell you. Let's say, for example, I'm talking about, if there is no financial reporting framework, in case of no requirement of applicable financial reporting framework to disclose or report related party relationships or transaction. Okay. So let's say, for example, there is no requirement. I said, auditor is still required to test. Auditor is still required to perform audit procedures. Okay. Is still required to perform audit procedures. Okay. And required to conclude now that is something we need to understand. Okay. Now let's say, for example, sole proprietor. You are doing audit of sole proprietor. Okay. Now, in case of a sole proprietor, there is an audit as per Income Tax Act. Now, however, there are some clauses in Form 3CD which requires you to report the related party transactions. But there is no requirement as such with respect to preparation of the financial statement. Although NDS with accounting standards with respect to non-corporate entities will also be applicable. I'll take another example. Okay. If I talk about another example, let's say any such audit which is not as per any provision of law, any act, but it is done voluntarily. Okay. Any audit which is done voluntarily, not under any law or act, but done voluntarily. In that case, there is no requirement of reporting related party transaction. Then how will you. Okay, I told you that okay, auditor is still required to perform audit procedures, but why? Let's say if there is no requirement of applicable financial reporting framework to disclose the related party transaction, to present the related party transactions, then why auditor is still required to test them? What is the purpose? You tell me what is the purpose? Why? So I told you that auditor is still required to test, but why? This is something we need to understand. Why? In case of no requirement of applicable accounting framework to disclose or report RPT, auditor is still required to perform audit procedures. But why? Why I'm saying this? What is the reason behind this? You need to reply to this why. Come on, guys. You need to respond to this why. Like why you I'm saying that still auditors is required to test. There should be some reason behind it. Very good, Vijay. Very good. Very good, Priti. Come on, guys. Why I'm saying it is required, still required to be tested. Tell me. Okay. Good, Geeta. Very good. But Tanisha, how it will impact my audit opinion? There is no requirement to disclose or report anything on the related party transaction. How it will impact my audit opinion? So if you are saying to express an audit opinion on the financial statement, then why it is required to why it is important from the expressing opinion side? Okay, good, Mohammed. Good, Kriti. Very good. Good, Geeta. Very good, Vijay. See, with respect to the related party transaction, I'll tell you why I need to do this. You guys are right. Okay. So when I talk about related party transactions, there are two things I need to understand. Number one, there is always a fraud risk. Okay. Now to address that fraud risk and to make sure that my financial statement achieve a true and fair view. Okay. Means that financial statement should not contain any transaction. That will be that financial statement should not contain any transaction, should not contain or material means not always. I'm not saying 100%, but materially should not contain uh, any material transaction which is either not at arm's length price or is either or is uh, you know impacting or is impacting the fair presentation framework. I'll tell you what I mean there. Let's say, for example, if there are transactions between two related parties, in that case, the role of auditor is to make sure that those transactions are at arm's length price. If they are not at arm's length price, then it should not impact my financial statement, and they should give me true and fair view. Simple example, and at the same time very effective and complex one. Okay, let's say for example, I have three entities: A Limited, B Private Limited, C LLP. Okay, there are three entities. Now, I'll make it this one as a this A Limited has 65% ownership of XYZ group. And XYZ group has 100% ownership here. Okay. So I'll write it in this way. Ownership of XYZ group. So here it is 65%, here it is 100%, and here it is 100%. Means all the partners are of XYZ group. Okay. Now, this is a scenario which makes this company as a related party because they are under the same control. Now, let's say, for example, revenue for period was, let's say, rupees 25 CR, rupees 80 CR, and rupees 65 CR. And this can happen. I'll tell you. It's not necessary that if it is a limited company, then it will have always higher profits, no, or higher revenue. No, it may happen that private limited company having more revenue and LLPs having more revenue because of some planning and everything. It could be there. That is perfectly possible. Now let's say profit or loss for the period was slash loss. Let's say here it was a loss of rupees 2 CR. Here it was profit of 10 crore, and here it was profit of, let's say, 12 CR. Okay. Now what happened is, this is a scenario. Now manage what, when the XY group saw this, they were shocked. Okay, no, my A limited company, which is in the market, which is a brand name, is doing losses. Okay, now this company, I get benefit from this company because I have shares of A limited, and A limited shares I can sold out anytime and get the good amount of capital gain. So I need to make sure the results of A limited are very good. Otherwise, people will share price will fall. So that was the pressure on the company. So what company did is, company made some adjustment. Let's say related party sales, related party sale, and here is purchase. Okay, so company said, okay, fine. Let's do one thing. Let's make a related party sale. I will say A limited, please make sale of 8 CR. Okay, now both LLPs and will purchase 44 CR from like A limited, and the profit margin will be such that after that related party sale, after RPT sale or transaction, profit position is, so the loss of 2 CR became profit of 4 CR. Okay, and here the loss of the profits of 10 CR and 12 CR, okay, got adjusted to that extent. So let's say, for example, instead of 7, it becomes 7 CR, and instead of 12, it became 9 CR. Now, if you see, I can do such more transactions and bring profit to this particular entity to show that this entity is doing good, to show a good picture. But the question comes is, this whole thing, can I call this as a reflecting true and fair view of financial or state of affairs of company, true and fair view of? Can I call this as a true and fair view of the state of affairs of company? What do you think? Can I call this as a true and fair view of the state of affairs of company? No. Okay. Good Gita, good Charu. Here, this particular transaction is nothing but, diversion of profits and diversion of loss. So here, this transaction is done to divert the loss. You know, this is to transfer the loss from one entity to another. Okay. Now it may happen this particular HCR sale purchase is inflated. Let's say for example, usually company sells at a profit of, let's say, if, GP ratio, or at a margin of, let's say, 10%, but this time company sold at a margin of 50%. So let's say profit after RPT, if I'm showing 4 CR, so lost plus this 6 CR. So I can say profit in this 8 CR is 6 CR is profit in this 8 CR. Means the ratio, if we can see the ratio of the profit I'm talking about here, margin is 75%. Which company sells goods on 75% margin? So I could say this particular whole transaction itself, this transaction itself is not on arm's length price. Now, if this transaction is not on arm's length price, then it's my responsibility to highlight to the readers that, okay, guys, I'm not saying that this transaction, remove this transaction on the books of account, but there is such transaction because of which there is an impact on the profit. So my job is to first identify such transactions, okay, and to make sure that the financial statement achieve a true and fair view, through a fair presentation. They are not misleading, because the transactions are not at the arm's length price. This will become misleading. So the readers will get, the leaders will be misleading that, okay, the company is earning good profit. So I want, that the financial statement should not be misleading. That is the role of audit, correct? To conclude whether the financial statement, insofar they are affected by those related party relationships and transactions, achieve a true and fair presentation and are not misleading. If I can ensure this, then yes, that's the role, as per the standard itself, that I need to make sure this happens. And that's why it's very mandatory to make sure that, they achieve a true and fair view. Because even though if there is no requirement of the financial reporting framework to, report any related party transaction, but these type of scenarios, adjustments still can impact your financial statement. So the fraud risk, that they achieve true and fair view. Number two, that is that the financial statement are not misleading. Okay, now you can say with respect to compliance framework. So I need to test still. I need to perform procedures still to ensure this is not happening. Clear? Any doubt? Okay, let us see some question and think about practically this particular scenario. Okay, let's discuss A limited, B limited, and C LLP scenario in a practical way. So let's say you have been appointed auditor of A limited for FY 22-23. During the audit, you asked management to share a list of identified related party relationship and transactions. Okay. However, management denied that there are no related party relationship or transactions. Okay. Now, as an auditor, as an auditor, kindly provide as to how understanding of entities, related party relationship and transactions be taken. Again, so let's say for example in A Limited, this transaction has happened. This sale of B Limited and C LLP. Now this transaction has happened. Now, but manage when you ask went to the management, you were not aware this transaction happened. But when you went to the management to share, okay, share me the list of related party relationship and transaction, and management said that wait, they don't have any such list. Then what you will do as an audit procedure to identify any such related party or transactions or relationship are there? What you will do in that case? Let's say this transaction is there, but management is not disclosing. Now you are unaware that any such transaction is there or you do not know. So how and what audit procedures you will perform? What you will do? How will you take the understanding of the entity, related party relationship and transaction? How? What you will do? Come on, guys. Come on, guys. How will you? What you will do? Come on, quickly. What you will do? Okay, good, Tanisha. Very good. Okay, good, Tanisha. What else? What else, guys? Come on. What else? Okay, good, Charu. Very good. Okay, good, Tanisha. See, very good, Vijay. Very good, Geeta. Okay, very good, Kriti. Very good. But see, whenever you guys are saying that, record the data creditors, promoters, big financiers, suspicious transactions at the start and the end of the financial year, managing directors, invoices, it's again possible but difficult. How many invoices you will see? How many, data creditors you will see? There will be a chance that, you are missing out. Like, although these are the procedures, but that might not give you that much comfort. That might not give you that much comfort. So, in this scenario, what you can do is number one, check for the check related party transaction or related party relationship, okay, between entity and parties, okay, from the prior period audit, or if you have the work papers, then work papers, or reporting done by the entity. So go to the prior period reporting, see what was reported. Okay, number two, if management is saying that there are no related parties, if there are nothing is there, then you can go and check minutes of meeting of board of directors if the company is there. Like here is the A Limited, and I told you that it's a listed company, so minutes of meeting will be there of board of directors and other committees. Because as per the Companies Act requirement, if they are doing any related party transaction, they have to take approval and comply with the requirements, listing agreement plus Companies Act. So from there also you can identify. Okay, then you need to understand, like such other documents or contracts with other entities. And when I say contract, it's a major contract. So instead of contracts, I'll write major contracts with other entities. Okay, inspect those major contracts with other entities and other documents, important documents. Again, as you said, shareholders, KMPs, directors. Okay, okay, you can verify their line and everything, so that you will get an idea about this particular thing, like who is the related party and who is not. Okay, so by this way you can get an understanding of such transactions or such related parties. Once you identify a related party, you can check the transaction with that particular related party. Are you getting? So it is by these procedures you can go and you can check, okay, basically whether the related parties exist or not. So for example, in minutes of meeting you can check, if uh, there is section 177 and 188 in the Companies Act, which somewhere mandates with the related party transaction, and audit committee has to take care of such transactions, discuss such transactions. So you can check minutes of the meeting to understand about if any compliance with respect to 177 is there, or anything on the area of these sections is there. Okay, so if the compliance is there, if any mention about these sections in the company's minutes of meeting, then it will raise a question mark, or it will raise some like trigger point. Okay, there could be some transaction, because 188 again requires to discuss and pass the provision. So you can look after in the minutes of meeting about section 188, or you can look after about any other, requirement of SEBI listing requirements, if they have discussed with other committees or something like that. See, I'm not saying that it will always be there in the minutes. If management is, involved into doing a fraud and they don't have the details in their minutes, then as I'm saying, you can check the prior reportings. You can check the major contracts and major transactions, important transactions. Why major I'm telling about is because if there is any small contract which is of not that much material amount with a related party, then it will not impact your financial reporting, or it will not mislead your financial statements. But any such big contract, let's say for example, sale which we saw, 8 CR sale. Now there is a big sale, big contract with a customer. So I need to go and check, okay, about this particular big contract. Because it could, if this is not on the arm's length price, then it may mislead my financial statement. For example, again, if I'm doing sales on a higher margin, very higher margin compared to rest of the sales, then again it raises suspicion. Like, okay, why I'm doing a higher margin sale compared to what I have, whether it is a related party. So on the similar lines, you can go and identify, the related party transactions, and you can check then whether any further things or details are required or not. So that is, you can do to identify a related party transaction when management is not providing you any detail, or when you want to corroborate, you want to recheck the details which are provided by the management. Okay. You need to share this whole information with the engagement team. And on the basis of that, you need to, understand whether the related party transactions poses a risk or not. Because once you identify a transaction, once you identify, something which was, let's say, for example, not disclosed by management, then, it's, if the auditor identifies any related party transaction which was earlier not identified by the management, or which management has not disclosed, first of all, communicate to all of your team members who are doing testing. If there is any transaction with this entity, look into that. Number one. Number two, what you need to do is you need to ask management why you did not disclose this. Okay. And now, if we have identified a related party which was not disclosed earlier, then understand what is the implication of that particular thing, not disclosing by the management, but existence of a related party on your financial reporting framework requirement. What things are required to be reported in financial statement as per applicable FRF. Number two, request management to identify all the transactions with this new identified related party. Now, let's say, for example, this thing. Here you identified, okay, B Limited and C LLP are related party. You will go to the management of A Limited. Okay, give me the list of all transactions which have happened with B Limited and C LLP. All transactions. Now that will become part of your related party transaction. Now again you will check, okay, B Limited and B Private Limited and C LLP is a related party. Let's check who are the shareholders. If we can get some details, who are the signing authorities? If we can get some details from the, let's say for example, private limited company, you can get details from MCA portal. So you may go to MCA portal, see who is the director, whether any director, same director in any other firm or something like that, any other company. So from that, you can identify whether, there are some other related parties or not. Okay. Then you will go and ask management whether it was intentional or, error. You will try to understand whether it was done intentionally, then there is a fraud risk. If there was an error, then why, this error happened, why the controls within the entity over related party transactions have not identified or detected this related party transaction. Okay, so it comes to the controls. Then you need to perform substantive procedure to understand whether this particular transaction of 8 CR is on arm's length price or not. Okay, or is appropriate or not. You need to consider the risk with respect to these transactions. Now, there could be transactions which are outside the normal course of business. For example, taking a loan. Okay, let's say for this particular purpose, the company was not going good and they required some cash flow. So it may happen the company has taken, some loan from a particular related party on a lower rate of interest, or either at a free rate of interest. So identify some, out of the, normal course of business transaction And these transactions can give you also a, a background kind of, thing that whether there is a related party transaction or not. Any doubt, guys? Any doubt? Okay. If no further doubts, you are able to correlate with the thing, then yes, this is the that also I've been talking about the related party transaction, essay as of now. Again, I'm only focusing on practical side. Reason because you might have already dealt with this particular essay in your intermediate. You have already seen in detail the requirements of the essay. So let's focus more on the practical side and let's see some questions also. Then on the topics what we have discussed till now. Okay. So let us see a one question that we already discussed yesterday. Remember one question that we discussed yesterday about inventory lying with a dealer. Now the inventory was with one dealer, that was Soho Traders of Malpensa Trading Private Limited, Malpensa Trading Limited. They were having some inventory of a shelf life less than 6 months with one trader, Soho Trader. Soho Trader was again, the director's son of Malpensa Trading Limited. Now, if I talk about this whole scenario, how you can identify whether this is a related party transaction or not? Number one, you can check whether who is the director of the company, whether any director, or relatives of the director having transaction with the company. Then on the basis of that, you may come to know that, okay, there is a Soho trader. So the company, if they themselves provided this particular detail, then you can, go check the transaction with the Soho traders in case of, Malpensa Trading Limited. So that was something, we discussed in the last session about inventory and aging analysis. So in continuation to that only, okay, in continuation to that particular question itself, now, let's understand one, something more. So, in continuation to that, let's understand one question. Now, how the risk of management override of control is higher if the management has a relationship that involves controls of significant influence with parties with which the entity also does business. Now, again, the question is that if the management is doing business or having a relationship or control, okay, on some entities, and they are doing business with those entities, then how the risk of management override of control increases, why it is higher in those cases. So the question is that, let's say for example, if there is a related party, then why the related party increases the risk of management override of control? Why do you think it is so? If yes, then give me the reason. If no, then okay. There, like if no, then why do you think the related party transition does not increase the risk of management override of control? Okay. So the question is why or how the risk of management override of control is higher if the management has a relationship that involves control or significant influence with the related parties which with the entity is doing business. So you need to tell me the reason why there is an increase or why uh, I can say that there is an increase in the risk of management override of control with respect to the related parties. Why do you think so? If yes, do you think that yes, there is an increase, then why? If you think no, there is no impact of related party transaction on management override of control, then you can say yes, there is no impact and it is same. Okay, so before you try, tell me what is management override of control. Before you answer this, tell me what is management override of control. Very good, Tanisha. Very good, Geeta. Come on, guys. Those who are not able to understand the question, you answer me this question, that what is management override of control? For those who are not able to understand the question still, you answer that what is management override of control? And for the guys or who has understood the question for you is how the management override of control is impacted by the related party transactions and relationship. Correct, Mohammed. Very good. Come on, guys. So now, Mohammed, it think like the management's ability to bypass whether there is any change in the management ability to bypass when they are doing the related party when they are doing related party transaction. So management override of control is bypassing the preset rules. So do you think the related party relationship increases the risk of bypassing the rules? If yes, then why? Uh, Geeta, the management override of control is already a risk. Okay, is a fraud risk. Management override of control is already a fraud risk. So remember two fraud risks that we discussed when we were discussing about SA 240. Number one, improper revenue or fraud risk with respect to the improper revenue recognition, and number two, management override of control. We already consider these two as a fraud risk. Then why do you think related party transaction will impact this? Like how it is impacting further? Come on, guys. But why RPT, related party transaction, and related party relationships impact or they increase the. So the question here is, I have management override of control risk in my financial statement, but how related party relationships or transactions are impacting or increasing this risk? If let's say for example, if it is not a related party transaction, still management can use override of control and can hide these transactions. But why RPT is critical from management override of control point of view? Why it is increasing the management override of control risk? So if I have to give the answer is, see, whenever there is a transaction that management wants to override the control, okay, in order to show something different in a transaction, they have to only, they can only amend the one side of the transaction which is occurring in the entity. Let's say, for example, receiving a loan, okay, from a bank. Now, management can use the, override of controls and can show this loan as the, something else. They can show something, that, okay, grant has been received or something like that. Or they can hide this loan directly if they don't want to disclose in the books of account. So management can do that. But that is only one side, not the other side. Other side, that the loan in the books of bank will be there. But when I talk about related party transactions or related party relationships, so the management who is exercising the control on both of the entities can amend the transaction the way they want at the both ends. At that particular point in time, it becomes very difficult to identify the true nature of the transaction. For example, let's say management, obtained a loan from a particular entity. Okay. Now, that was a loan, everyone knew that. But, okay, management disclosed that as an advance received for the sales, or management disclosed the same as a sale, amount received in front of sale or in front of service provided. Now, if it would be a bank, then it would have been the problem, because bank would not show them as a, purchase or expense. Bank would still show that loan given. But in case of a related party books can also be, modified and can, and at that particular point in time in their books also, it can be shown that, okay, this is expense or this is purchase from this particular entity. So it becomes very difficult when you even ask for the confirmation, third party confirmations, or you go and verify the books of the related party to identify the true nature, whether it was a loan or it's a service providing. So why the amount has been received? It becomes very difficult when it comes to the, management override of control and related party risk. Are you getting my point? So let us see the answer. Okay. So answer is that related party, by virtue of their, sorry, related parties, by virtue of their ability to exert control or significance influence, may be in a position to exert dominance influence over the entity and its management, the way I was talking about. The fraudulent financial reporting often get involves management override of controls that otherwise may appear to be operating effectively. The risk of management override of control is higher if the management has a relationship that involves controls of significance with the parties with which the entity does business, because these relationships may present management with a greater incentive and opportunity to do the fraud. Okay. For example, management financial interest in certain related parties may provide incentive for management to override the control by directing the entity against its interest, or to conclude the transaction for the benefit of these parties, and colliding with such parties or controlling their action. Means collusion that I was talking about. Both entities together report something which is not actually in the place. So, for example, creating fictitious terms of transactions with related party designed to misrepresent the business rationale of these transactions. Fraudulently organizing transfers of assets from the management or to the management at other at amounts significantly above or below market value. Engaging complex related party transactions such as special purpose entities that are structured to misrepresent the financial position of the performance of the entity. So a lot can be done when a related party transaction and management override of controls comes together. A bigger risk can be there. Okay. Any doubt with respect to this? Any doubt? Any doubt, guys? Okay. If no doubts, should we proceed ahead? Okay. Let us see one more question. Okay. In continuation to the question that we were discussing about, Suhas and the traders. Okay. In continuation to the above question, Mr. Suhas, after inquiry with the management, analyzed the balance outstanding with the other authorized dealers, which is given below. So the Padma traders, whether related party, no. Inventory with them 12 lakhs, AR outstanding 8 lakhs, and oldest AR 3 months. Polka distributors, related party, no. Inventory with them 35 lakhs, AR outstanding 12 lakhs, and oldest AR is 7 months. Himmat Trading Private Limited, again not a related party. There is no inventory with them, but AR outstanding is 14 lakhs and oldest AR is 8 months. Now remember in the question that we discussed was that the inventory lying with the Soho traders was in total, if I talk about here, they have provided the aging which is lying with the Soho traders, that is 25.6 plus 33.4 plus 46.9, again plus 78.4 plus 123.6 plus 96.4. That is 404 CR, 404 lakh. This is 404.3 lakhs. Okay. And the total AR balance here is 36.6 plus 47.9 plus 65.1 plus 98.1 plus 165.9 and then 114.8. That is 52, 528.4. 5 lakh 28, 528 lakhs 0.4. Okay, this is a balance we are talking about. Inventory and aging. And in this in that particular question, we also understood that that it is normal practice that the company followed. That is to keep the inventory at the go down maintained at the Soho traders. And as per the company, this practice was followed with the other dealers also. Remember in the last section, when we discussed about the question, we were saying the sole traders was authorized sole authorized distributor for the company, and hence it was normal practice the company followed. That is to keep the goods, at the go down of sole traders. And as per the company, this practice was followed with the other dealers also. Now, okay, if you see the inventory with Soho traders is 404 lakhs, AR is 528 lakhs. But if you see with the other dealers of, who are trading with the company, if you talk about other dealers who are trading with the company, the balance is hardly any in lakhs, AR is hardly any, and the oldest AR is 7, 3 or 8 months, max to maximum. Now, you need to guide Mr. Suhas with respect to evaluating assertions that the related party transactions were conducted on equivalent to those at prevalence at arm's length price. Now, what is required to be done here is you need to guide Mr. Suhas that how he can ensure that the transactions which are conducted either with the Soho traders or with other dealers, and the transaction which is conducted with the Soho traders is is at the arm's length price. So how you can ensure, how you can, help Suhas to identify this? So what you will do? What you will suggest to Suhas to check in order to understand whether the transactions are at arm's length price or not? Come on, guys. So what it will be done, or what you will suggest to Mr. Suhas in this scenario? Come on, guys. What you will suggest to Mr. Suhas in this scenario? That how he should check whether the transactions are at arm's length price or not? Come on, guys. Quickly, how will you suggest, or what you will say to Mr. Suhas, that if you want to verify whether the transactions are at arm's length price, what he needs to check then? Come on, quickly. Now you have a data in front of you that what is the transaction with other parties. Very good, Geeta. Very good, Mohammed. So use the data in front of you that what is the transaction done with the other parties and what is the transaction done with the solo traders. Come on, guys. Come on, quickly. Good, Geeta. Very good. Good, Vijay. Very good. So yes, what can be done in this scenario? I'll tell you. Okay, we can, so in this scenario, we have the data in front of us. Okay, we have the things in front of us. What could be done is, okay, now auditor can, go and check whether the transaction has been conducted at market price. Okay. At times it becomes very impracticable to compare the things at the market price because you might not have the market price details. But at the same time, you can pick up same transactions with the other people and with the other, person, and you can check. For example, inventory lying with Soho traders and amount that is required to be received. So at what price the same item is sold to the Soho traders and sold to someone else? One, you can compare that so that to identify whether any favorable treatment has been given to him or not. Number two, now management told you that it's a practice that they keep the material at the dealers, and it is a practice that they follow with all the dealers. But we could see in the data that material lying with Soho traders is very much high compared to material lying with other traders. And in one of the case that in case of Himmat, there is no inventory lying with them. In the rest of the cases of authorized dealers, if you see the oldest AR is 7 months, 3 months, or 8 months. But in the case of Soho traders, the oldest AR was more than 5 years or 3 to 5 years. If I show you, the oldest AR was 3 to 5 years, that is 114.8 CR. 114. And total, I am talking about 528 lakhs of AR, that is 5 CR, near to 5 CR. Okay. Now I am talking about 5 CR of basically account receivables. And here in the, with other dealers, I'm talking about only in lakhs. The AR is only in 8 lakhs, 12 lakhs or something like that. Not even that much aged. So I could clearly see the difference between the transaction with the other dealers and Soho traders. I could say that, the credit terms to the other dealers and to Soho traders are not matching. Number two, the inventory which is lying with the other dealers and Soho traders is not matching. Okay. Then I could say, that the transaction that are, done with the Soho traders, let's say, for example, at the price at which it is sold to the Soho traders and the price at which it is sold to other distributors could be different. Okay. Then I can compare what is going on, with respect to the decision by the management. Why management is not selling? It may happen that, okay, it's a genuine case. Let's say, for example, other dealers are not, ready to purchase that much compared to what Soho traders is doing. Other dealers are not interested. Could be a genuine scenario. But for that, we need to understand why there is a difference in the price, why there is a difference in the credit term. Could happen that, that other dealers are not that much credit financially sound, or they do not have that much credit worthiness. So I gave a credit, terms and credit period, credit limit and the credit period based on the credit worthiness of the person. So let's say, for example, if there is a dealer who is already on the brink, brink of that insolvency, I may not give him a credit period, anything. I may ask him to pay immediately. And he might not have a AR balance also. Or I might not trade that much with him. So having differential terms is not a problem. But understanding the reason behind the differential terms is necessary. In order to establish that there is a favorable treatment and there is no transactions are not at the arm's length price. Again, problem is not the, having different terms. Problem is that the reason, there is no reason behind either the different terms or the reason or the logic is not, valid. In that case, you can say arm's length price is not present. But if the reason is there, why there are differential terms, okay, why this is the scenario, then at that particular point in time, you need to consider all these things and you need to see whether after considering or after, analyzing all these terms and conditions, can I say this transaction is still at the arm's length price? If yes, then fine. If no, then there is an issue for me. There is a risk for me. So differential terms is not an issue, but differential terms without any valid reason, without justification, or showing a favorable treatment is a indicator that the transactions are not at the arm's length price. So you need to consider the the overall scenario with all the details in picture. Clear? So in this scenario also, I could say to Mr. Suhas that consider the transactions with other dealers in the market, their credit terms, okay, any prices that has been charged to them. And when I'm comparing, I need to compare similar person. So when I compare in the arm's length price, I have to compare apple to apple. For example, dealer having same credit worthiness, dealer having same credit, capacity of buying, or dealer in the same area or dealing into same goods with the dealer of same category. I cannot compare apple with an orange. Okay, let's say for example, uh, I give you a hypothetical example. Okay, so let's say I manufacture TVs. So I sell, I have authorized dealers, and one such dealer is Chroma, and another are local dealers. Now that is by default that I am maybe selling high number of inventory to Chroma at a lower price, and it may happen that I am giving some additional benefits to that particular entity because they are buying in bulk. That is for sure. That's a part of business, but that doesn't mean that Chroma is my related entity. So, or it may happen that if a Chroma Tata Enterprise is buying from another Tata entity, it is not because if they are getting benefit, it's not because they are the related party. It's because of the business. In that case, I need to understand. I need to compare Chroma with something of the similar line, like say Reliance Digital. If Reliance Digital is also taking good same TVs from me, then yes, I need to compare apple and apple. Otherwise, if I compare Chroma with a local retailer, I'm going to see a huge difference. That is for sure. So clear with the answer? Clear with the understanding? Any doubt till now, guys? Any doubt? Okay. So there is one doubt with respect to, in module, there is question number 5 and question number 6 on page number 5.7 and 5.9. Now, how to write an answer for these particular questions? See, again, I can guide you how to write an answer. So yes, answer is not given in the module because you need to write answer in your own words, in your own way. Okay. Now, again, if you see the question, as an auditor of the Groom Limited, you are sent positive confirmation request to 30 creditors of the company. All creditors are in informal and small concerns. You send to choose confirmation request to all the above parties at their business address stated on the respective bills after discussing the matter of the company with the CFO. And CFO is cooperative, he does not raise any concern. Now, response time was within a week. Your clerk informed you that out of 30 creditors, GST registration of 25 has been cancelled during the financial year 22-23 itself by collating information from GST portal. He further informs you that there are no fresh registration pertaining to PANs of these particular parties. Okay. So how will you proceed with this scenario? Now see, in this case, again, this is the classic case, when you are sending a confirmation, okay, positive confirmation to the creditors, there are two things. Number one is with respect to the confirmation. Number two, with respect to the GST registration. Okay. Now, if their GST registration has been cancelled, so there could be a scenario that there are chances of a fraud risk. Okay. There could be a chances of that they might not be having the same address or the entity is no longer existing. So in that case, you need to make sure when you are sending the confirmation, you are picking up the correct address. Okay. And I could see, out of the 30 creditors, GST registration of 25 has been cancelled during the financial year. So is there any bill that they have raised after the particular cancellation of the GST? So for example, once their GST got cancelled, they are still raising GST bills. That's an issue. Okay. You need to go and perform alternate audit procedures. Okay. He further informs you that there are no fresh registration relating to the PANs of these parties. Means they are not even registering their PANs. That has been cancelled. So in that case, you need to perform alternate audit procedures because there appears to be a fraud risk. and accordingly you need to make sure that uh, there are high chances that these creditors might not respond you back. Okay, and what is the payment, that amount that you have made to these creditors. Okay, whether they are still providing you GST bill, whether the transactions are going on with these creditors, what is the scenario. You need to understand all these things, and you need to see from fraud perspective angle also. So when you are writing the answer, you need to make sure you mention 505. Okay, you need to make sure you mention SA 240, and you need to perform alternate audit procedures, because there are high chances that you might not receive a reply back. But okay, so there is in the question that response to the confirmation are received within a week's time. Means confirmation response have been received. Okay, so then there is a higher chance of fraud, because response has been received, but their GST registration has cancelled. So it raises an authentic, doubt on the authenticity of the confirmation. So there are two conflicting evidence available with you. One, you have received the confirmation, but these creditors GST has been cancelled. They have not applied for the PAN number. Okay, means there are two conflicting evidence in front of you. There is a conflict in which this conflicting evidence is raising doubt on the authenticity of the confirmation received. So for sure, you need to perform alternate audit procedures, and there is a chance of risk of fraud also. So this way you can write the answer. Number one, SA 505, when you have a two evidence from different source showing different things, there is a doubt on the authenticity of the confirmation. In that case, you need to perform alternate audit procedures to resolve the doubt or conflict between two evidence. And if there is a doubt on the authenticity of the confirmation, then you might consider the fraud risk as per SA 240, and you need to perform additional audit procedure to gather sufficient and appropriate audit evidence in order to ensure that there is no material misstatement in the balance, basically. Then second question is, CAM Hussain is appointed as the auditor for the firm for 22-23 on 31st July 2022. The accounts of the firm were unaudited in year 21-22. The firm had material inventories reflected in the financial statement even as a close of 31st March 22. He is performing audit procedures, including attending physical inventory count on 31st March 23. However, there is a lingering doubt in his mind regarding the opening inventories reflected in the financial statement. Does there exist any responsibility on his part in such a situation? Simple. Again, remember when we were discussing about SA 501, I told you that, or SA 50 10 initial audit engagement. At that particular point in time, I told you that there are some audit procedures which not only give you comfort on the closing balance, but they give you comfort that yes, their comfort on the opening balances also. Okay, so if first of all you need to determine, okay, whether your current periods audit procedures are giving you any comfort on the opening balances. If yes, then you need no need to perform any other alternate audit procedures. Okay, but if they are not giving you comfort on the balances, which on the opening balances, then you may look into performing other and alternate audit procedures. Okay, so if you perform inventory count at the year end, so at least you are sure that your closing balance is complete, your closing balance does not contain any misstatement due to opening balances. So your closing balance does not contain any misstatement due to opening balances, that you will mention, that is, you are sure for that. Means you are getting some comfort that there is no misstatement in your closing balance due to your opening balances, because your current year audit procedures are giving you that comfort. And hence, there is no any other liability or responsibility on the part of the auditor to validate the opening balance also, to do the audit of opening balance. Clear? So you can refer as a 510 in this scenario. Any further doubt? Any doubt? Any doubt, guys? No? Okay, good. So, if no doubts, here is the conclusion of our chapter 5. Okay, we concluded the audit evidence chapter 5, and from the next lecture, we'll start the chapter 6. Okay, so be prepared with the chapter 6, that is completion and review. Okay, and read the study material before. I will be discussing essay 560, 570, 580. And again, I will be more focusing on the practical side of these essays, not on the theoretical part. Okay. So let's meet in the next session and discuss chapter 6. Okay. So thank you guys. Thank you for participating in today's lecture. I'll see you in the next lecture. Thank you.